Hello everybody, this is Jeff from Zen Trader, and this is a market update for Tuesday, May 17th. Blame it on the full moon. That's what I say. Or you could blame it on the gap, or you could blame it on the multiple negative divergences that we have going on in the market. Blame it on a lot of different things. Why the market dropped today. But what I don't want to do is to let the late day rally give hope to people to the bulls, for instance, people who think that this market is going to bounce back, and it may. I don't want to be in the perma bear camp, but I'm not seeing anything that suggests that today was a pivotal moment where the bulls made a stand. Especially when you look at this chart, yeah, we rallied better in the Dow, but you know we moved 20 points off the low, and you know we barely made it back to where this market gapped up back in late April. I am somewhat surprised that we didn't just continue down to this gap here at 2740, but I guess this was enough of a fall that the debt buyers came in and bought some stuff up. Shorts covered. I did cover half of my position, and I would like to see this market rally tomorrow. I would like to see a gap up, move higher, maybe even close higher tomorrow. That would be great. I think that would be a good short entry if you missed the timing, the negative timing signal that we got here. This chart is let me pull something up here. What these are confluence lines, and I get them from Pivot Farm. And if you want to learn more information, you can actually get, for whichever market you want to trade, these are Power Sheets Lite. They have part of the information, but obviously if you want all of the information, you need to be a paying member. And I do try to update these on my website at certain critical points to kind of see where support and resistance lie. And basically we made it down below the lowest, most important point of support, and then we bounced. But you know, this is, you know, the RSI is weak. This is not much of a bounce. This is not something to get too excited about. You can see here volume did rise on the NASDAQ, but we are still on the major indexes below the middle Keltner channel, and you know these are all pointing down. So until we have a strong close above the middle, and you know, let me put it this way: if we can have a strong day tomorrow, that might be something to build on. But without some follow through to today, in my opinion, today's late day rally was completely meaningless. Here's a daily chart of the Dow, and you can see that we are now below this bearish rising wedge. Basically, we bounced off the lower Bollinger Band today, but we are still below this very large bearish wedge here. So I'm looking through charts, but I'm not really seeing much to get excited about. Here is the NASDAQ advanced decline. And I would say this is about as close to a double top as you're going to have on a chart like this. And now everything is starting to roll over. The MACD has been forming some pretty significant negative divergences. The RSI, same as well. The EMAs here, the 13 and the 34 are rolling over, and the negative DI on the ADX has overtaken the positive. And then the last chart I wanted to point out here is that we are not, this level down here, negative 800, negative 1,000, are very negative days where the potential where the markets could bounce. We have not, throughout this entire decline, had that. So I would definitely continue to focus on the short side, guys. Have a good night.